welcome to a new episode of Inside the Deal, Healthcare VCs to Watch. I'm Carrie Nixon. I'm the founder and the managing partner at Nixon Law Group, where we work exclusively with healthcare innovators who are building the future of care, many of whom, in fact, are seeking investment for their companies. So this video series is really meant to spotlight investors who are helping these founders, not only by investing, but also helping them navigate the complexities of building and scaling a successful digital health company. Today, I am very pleased to be joined by Anne DeGheest. Anne is a true pioneer in the healthcare space, I have to tell you. During the course of her career, Anne has been not only an entrepreneur, but an executive, an investor, and an advisor to digital health and health tech companies. She is the founder of HealthTech Capital, a venture capital firm, and also of MedStars. And Anne calls MedStars a mentor capitalist. They are an advisory to founders in the health tech space. Welcome to the show here. And if you're ready, we'll dive in.
Yeah, I'm looking forward to it, Carrie. Thank you for inviting me.
Terrific, terrific. Well, Anne, you have spent decades at the intersection of healthcare and innovation. I have to ask, what first drew you in to this space, digital health, health tech, and what's kept you here through so many market cycles?
Yeah, that's an interesting question. So after I graduated from Harvard Business School, which I'm very proud of Harvard right now, I basically started my career in a company called Raychem in the computer and telecommunication space and in sales. And skip the details there. Then I went to a company called Nelcor and launched pulse oximetry worldwide. And it was amazing there because we had the fastest standard of care ever. And I learned one of my first lessons is that we spent around $2 million to build a product and $20 million to create a new category. That category now is over $1 billion in yearly revenues there. And so that market creation became something I was really fascinated. And then I basically joined my two expertise, which is the computer and then the healthcare. And I created this new space in 1986 called HealthTech, way before several people in the audience may have been born yet. So of course, I started as a baby, as you can expect. So as a result of that, I defined this that in traditional Medtech, what you do is a product risk going after an existing market. And there's a roadmap of to get product development, they go to FDA, beg FDA, get approval, and then somehow get paid. But the market is waiting for you. In health tech, it's the reverse. It's the low product risk, high market risk. And so really, most of the medical device investors at the time didn't really understand that because they were typically looking for what's the IP, what's the mechanism of action, do you have an existing reimbursement code, or do you have an ROI that you can show to the hospital? And I was going to them to say, I have no IP, I'm using off-the-shelf computer technology there, but I'm changing a workflow, which is kind of a red flag. And we're going to create this new category, but you have to trust me because it's going to be big. And you can see these were very short conversations. And came out of that several very big successful companies, Pyxis, Omnicell, VZQ, and all of that really create brand new multi-billion-dollar categories there. But fully for 25 years, I was a lone ranger. I was the crazy Belgian lady. And then I had like 8 IPOs, which is unusual. Normally, it's usually more M&As. And that's because they were market category makers, which is unusual. So over $20 billion in market cap. So I've been on every side of the table. I've been an entrepreneur. I've been an executive as the company grew to $30 to $50 million in sales. I decided that was my sweet spot, 0 to 50. And I've been an executive residence with 2 venture firms. And I've been an advisor and mentor. So I've been on every side of the table. So I fully relate to the entrepreneur, the good, the bad, and the ugly that they're going to go through. And I think the reason you ask me, how do I put up with all the roller coasters, and we can talk about the roller coaster a bit later on, is that one of the nice things about healthcare is that you have a positive impact, as opposed to developing a plastic product. And so when my son was in high school, they asked their parents to talk about career. And of course, all the 18-year-old wanted to be venture capitalists, to which I say, well, what's the experience you bring to the entrepreneur? I mean, I see you like lifestyle, but what do you do for them? Why should they work with you? And I told them, in my case, I basically calculate based on published statistics that my companies had saved over, 10 million lives. And there's something about that really makes you feel better at 3 o'clock in the morning when you're losing your shirt, everything is going crazy, and you say, why am I doing this? So I think that's one of the beauty of healthcare is that it has a positive impact.
So 8 IPOs, 10 million lives. That's a pretty good driver, right? That's a pretty good motivator.
Yeah. And when you start, you don't know you're going to get that impact. It's really after the fact. And I think it's really important for the people in the audience that at time, instead of continuously looking at the daily crisis and all the bombs coming at you for the future, to take a little pause and look at the trajectory you've accomplished.
Yeah. I mean, as a founder myself of a law firm, I can say you're absolutely right. It is very easy to get mired down in the day-to-day
crises
crises and struggles, right? And it's super important to step back and take a look at the big picture. So I want to get a little bit more of your wisdom on sort of deals in general. We're going through a very interesting, to say the least, sort of cycle in our economy, right? People are talking about B round funding being kind of frozen. They're talking about maybe Medicare Advantage isn't going to be as interested in innovations as they used to be. What mistakes are you seeing early stage founders make right now in sort of how they think about positioning their business or how they think about navigating this particular time?
Yeah, so when we look at companies, we're looking at 5 risks, and that's really important to understand. In the C to A Series A stage, we're all basically trying to decrease the perceived risk before investing there. And that's the role of the CEO is to decrease those risks. And then as you scale up and you have revenue, then you're basically into metrics that you want to scale up in a way that you're profitable. So it's a very different role. But in the early stage, there is what's called a product risk. Does it work? What's the mechanism of action? Do you have any IP? There's the market risk, which is, does anybody care? How big of a market? Why will they pay? And what do you have to do to convince them? There's a regulatory risk, which is, do you have FDA oversight and what you have to do to convince the FDA? There is a funding risk, which is how much money does it take? I mean, if you take $150 million of investment and the exit is 50, that's not a good math, for example. That's obvious. And then, of course, there's the team risk. In the early stage, there's always hole in the management team. So very often when I see a lot of the healthcare startup, they usually started by a technologist or a physician if it's Medtech, but in HealthTech, it's usually a combination of technologies. And when you're under stress, you go back to what you're good at, so you make more features. Right? In the early stage, you have shown capability, and honestly, HealthTech are not that complicated to make. I mean, this is not like a cure for cancer, like on the drug side. And what they need to spend more time on is to basically, what's the problem from the viewpoint of all stakeholders? Very often people really miss the details. You have to look at from the viewpoint of the nurse, the physician, the CFO of the hospitals, the payers who may have to pay for, all the different people, and they may have at time conflict of interest. And how do you align that? And if you have a value proposition to sell to the payers, it's very different than what you're going to do if you sell to the providers. Who is your customer? So we have people coming to me and say, well, we sell to everybody. And I say, good luck with that. And so I think it's very important that you have a business partner in the early stage who asks this tough question, which is, so what? Who cares? Why will they take a risk on you, an unstable startup that may be under in 6 months? Why would they do that? That's a terrible thing for their career if they do that. And how big of the problem is this acute? Are they aware that they have a problem? So really spend more time on the problem, and you have something that anybody cares about. Yeah. Then you can talk about the technology.
Make sure that the problem that this company purports to be solving is actually a problem in the minds of their stakeholders, the buyers, right? Their potential customers.
And who is a decision maker? So for example, I'll give a story called a company called Pixis, which was based in San Diego, and now they're part of Becton Dickinson, but they went public and they got acquired multiple times. And, there's like a whole tree to keep track of that. So when they got started, it was a physician who had lost a patient due to medication error, and he was going to fix that. And so they developed what's called a Coke dispensing machine, where all the meds were supposed to be there, and then they were supposed to drop down through a carousel there, as a single dose dispenser there. Well, from a technologist point of view, that looks great, but from a practical point of view, the pharmacist and the nurse will never use that for all those reasons. And they spent $3 to $5 million to do that, thinking that the decision maker was the pharmacist. Well, the pharmacist wants pure power and control. Because if there's something missing in some of the opioids, for example, they get charged personally as well as the hospitals by the DEA. That's kind of the problem they find. And for lots of reasons, that machine didn't make any sense. And they were putting rectangular boxes into pie-shaped triangles, which is not exactly best optimized design. And so I got approached by one of the investors, and I said, well, I love the problem. You have the wrong solution. And then I said, the person that really cares is the nurses, the VP of nursing, because when the key was missing, you had to run around, people go home with that, and then they steal it from other people there. That's why you had all these medication errors. So if you really start to understand who is using it, who has the power at that time in the hospitals there, which was nursing had shortages. And initially we sold it to the VP of nursing. I went to a big trade show in Orlando, which was in the summer, which was so hot, it was ridiculous. I was the only business person in these conferences with only the VP of nursing. This is a long time ago. And I basically convinced them to say, get rid of 1 or 2 FTE, because that makes the other 99% FTE very happy, because they don't have that hassle. They can spend time with their patients. Mm-hmm. And you get bureaucracy. So that's what I'm saying. Really spend time in understanding, the process, the impact on the different players, and who has the power to ask for the money, especially for the first 2 to 5 customers.
Yeah.
the early adopters, and I need to be willing to take a risk on you.
So given all that, from your perspective, what does it take to build a health tech startup that scales and that lasts, right? And because presumably a company is going to evolve, right, over the course of its life cycle. How can you be sure that it is evolving in a way that is good for the company and is taking stakeholder feedback into consideration?
Yeah, so you need to be ultra focused, so don't start a company and say, we're going to be a platform, we're going to change healthcare providers, healthcare, the medical records and everything else. And we call this boiling the ocean, which you really don't want to do. So have a big problem that you define that has an impact and that matters. Is there a sense of urgency? Do people are even aware they have that problem, or do you have to educate the market? Now that can be done, but the way you do it takes more money and different skills of expertise. And customers are buying a solution to an acute problem that is really, really annoying to them. They don't buy technology for the sake of technology. Don't sell AI for the sake of AI, to help you in efficiencies. That doesn't do it. Sell that I'm basically allowing you to upcode the billing so that you can recover $2 million per year without, and spending 100K, I don't know, whatever, something like that. So it's really important that you understand the product market fit for all stakeholders. That's the first thing. What's the big problem? Then have a creative solution. A lot of people do what's called improvement, a slightly better version of somebody else. That means somebody else will do the same thing to you. It's much more interesting to create a new product, a new category there, because then you have a couple of years to build barrier of defense behind yourself. And the barrier of defense could be business models. We, for example, at Pixis, we did a lease, 5 years staggering there, and nobody could break the lease. So it was very hard for the competition to game. We had no IP, which was incomprehensible for the Medtech VCs. And then, are you a product or a market risk? What you don't want is both. Mm-hmm. You don't want to have to spend a lot of money to validate the product and more money to basically create codes and reimbursement and market category there, because then you run out of money and the VC will do down round pay to play and everything else. So know what you are, and the way you develop a high product risk, which is more medtech, or high market risk, is very different. The skill set, the type of investors you have is very, very different. And then be honest with yourself. Do you have a sticky business model? Who will pay and why? This is such an important question, which is, what's the data? Do you need to prove them? If, for example, you say, I'm going to decrease the length of stay in a hospital, you know what it takes to do that? I mean, it's a nightmare. It's very expensive. It takes a long time. One of my company, VisiQ, was decreasing by 28% mortality and drastically decreasing by having half a day of ICU days, which is very expensive there. It took years of everybody repeating the same studies. And every time they came back with the same things, they were decreasing mortality, they were decreasing length of stays. And people need to validate. So how are you going to validate that? How you do the demo? So really understanding the so what. People are not going to take your word to basically buy your product. And then what's the workflow? If you have to get the nurses and the physician to change their workflow, it's really very difficult.
Almost impossible.
Unless you do something for them, which is you take away a big hassle there. So really understand who's going to train, who's going to deploy, how do you maintain it, and what are the basic unique economics. There are a lot of people who just say, I sell my software to a hospital for $100,000. On the average, it can cost up to $250,000 because it's a 12-month selling cycle, multiple visits to the demo. I mean, it's really understand the reality that selling to providers or payers or pharma are very slow selling cycles. When you get a demo from the payers, like a Medicare Advantage plan, that's very different criteria than to renew for 2 to 3 year contract. Understanding what you have to do with actual data. Really have this conversation to say, okay, maybe they pay you $50K for the demo and you're all happy because you're in. That's just the beginning of the dance. And having those conversations to see who are the decision makers, what are they looking for, how am I going to collect the data? Are you willing to share the data? Some of the time they don't. So how are you going to make your case to really have a scalable, business model there? And
yeah, I love the notion of building a moat, right? Sort of building a moat around your product. And as you suggest, you can do that through IP, protections. You can do that through FDA applications. There are ways to sort of...
the pricing and the business models.
That's right.
Revenue recognition, all those things, you have to be creative, think outside the box. Yeah. I call this to be a business architect. I define myself as a business architect, which is with creating a new space, new category, and building the moat, not with IP, which is very hard to defend. I've been on board a company suing, big guys for IP. It takes $50 to $70 million of war chest to basically be taken seriously when you go after the big guys. So you don't have that when you start. So you basically, it's marketing. It's not really a barrage. And then be aware of what you're selling. Are you selling a product, like let's say a software licensing, and now you have to teach them and to convince them how to use it? And if they don't know how to use it right, there's value proposition in there and you don't have a renewal. Okay. Or are you going to outsource that whole task, which a lot of people are doing right now? They do, for example, extension of clinic services, and they do the billing, or they have the clinic doing the billing, and then they basically are outsourced contractor. The margins are very different. The way you acquire that, the stickiness, the cost of all that. So know what animal you are. Are you a duck or are you a horse? I mean, it could be very different. I know that's coming up in my brain. And the biggest thing is that learn before you scale up. I mean, one of the reasons some companies are blowing up is during the crazy time of 2021, 2022, where there was free money and people just say, I want more money, give me another safe every 6 months.
Yeah.
These people went nationwide and they were basically building the company with people just was building growth. And what they were not doing is learning how to sell. And so when you're out there, you go to your first customer, and the academic person is going to be different than a community hospital. So you have to do both. Mm-hmm. You learn why they're excited by you. That may have nothing to do with what your vision was. And then do that, learn, adjust, correct, adapt, learn how to sell. Then you can scale up. But the problem is that when people raise money at really high valuation, the VC assumed that you were in that scale up mode. Well, you hadn't still learned how to do that yet. And so they scale up with the wrong model, and they basically had no chance to recover. So we see a lot of those corrections right now, which now bring me back to the next thing, which is have the right investor syndicate. Have people on your board who have built company in the space, who understand the complexity of healthcare and understand who is paying. That could be the providers or the payers. These are very different people there.
Yes, yes.
And people just thinking they go for the money and the highest valuation. That is a huge mistake. What you want is that you want a community. It takes a whole village and of investors who are partner with you. And I hate to tell you, but they can fire the CEO, but you cannot fire your investors. So it's really important, the chemistry, right? You're being honest with them. You share the good, the bad, and the ugly, because they're there to help you succeed.
Yeah, so true.
That mindset is critical. And then the last thing is that, like you saying at the beginning, is that you have to get the right team at the right time when you're scaling up. So the people who start may not be the same people who are scaling up from $5 to $20 million, may not be the same people that go from 20 to hundreds of millions of dollars. And having the mindset as a founder to know your strengths and your weaknesses, to know when you have to bring different skill set at different phases is really essential. And having the confidence that you don't have to know it all.
Yeah, absolutely. Well, look, so you have mentored dozens of founders through successful exits. So I suspect you're going to have a good answer to this question. We've talked about a lot of different things that founders need to do to succeed. If you had to say one trait that that is absolutely necessary for a founder to have in order to succeed in this space, what trait would you say?
Having a flexible mindset. It's the ability to listen as opposed to tell people what to do. Number two, act upon it, learn, adjust, and correct. That is so fundamental. It doesn't matter how smart you are, you don't have all the answers. But that ability of having a flexible mindset, that doesn't mean you have to go zig and zag in every direction when people tell you what to do. But the ability of getting multiple opinions, make the decision as a leader, and adjust and correct, because you have to make decisions with 20% of the facts. That means 80% of the time, you have to adjust and correct because you learn something new as you're executing. That mindset is essential. A lot of people come from big company have a problem with that culture because they politically had to get 99.9% of the facts and consensus before making an official decision. In a startup, you cannot do that. The market will pass you. So it's very nerve-wracking for a leader that you have to make decision, knowing that most of the time you were missing some key parts, but it was more important to make the decision, act, and learn than to be right.
Yeah, I love that. I actually thought that might be along the lines of what you said, the sort of flexibility and the ability to sort of evolve as circumstances dictate, right? That it's very easy, I think, for a founder to get really married to their initial idea and to be sort of very locked into that specific idea, only to find out maybe it's not quite that idea. Maybe it's something peripheral to that's really going to work. And you've got to be able to sort of let go and go.
Nobody gets it right on the original business models. I mean, the Valley is full of those stories. Yeah. And I think the other thing is the mistake a first-time CEO makes is that they have to show confidence and be absolutely unmovable.
Yeah.
Which is a big mistake because what you want to show is exactly the reverse, which is you have strong opinion, you're passionate about it, but you're willing to listen to suggestions. And people want to work with you and make you successful.
Yeah. I think that especially for first-time CEOs, right? There's the tendency to want to be able to present a very firm, very strong presence, right? I'm making the calls, I'm making decisions. But in my experience, it is absolutely those CEOs that take a moment, listen, ingest, think about it, and then react that really are going to be successful.
Yeah.
So
that's very important.
So as we wrap up, I want to ask you about one habit or a hobby that you have that has nothing to do with investing, but what actually makes you a better investor. And I think I know what this is going to be based on an earlier conversation we had, but I'm interested to hear what you say.
Well, I think it's very important to balance left brain versus right brain. And so left brain is the operational, analytics, looking at deals and all of that. And right brain is the creative part. And you really need both sides to really have an instinct for what's going to work, because in the early stage, you have to guess and all of that. So in my case, I'm an artist in my spare time. You can check me out at ADeGheest.com. It's my first initial and my last name. And I basically do digital art on my iPad. And I'm able to use technology, like Adobe Acrobat types, different layers, and do the special effect, and I get them printed on metals. So it just had 300 people showed up as an art show I did together, a couple of weeks ago. And that kind of gives you a totally different perspective, kind of on the other side there. And then the other thing I do is I do Qigong. I'm not sure I'm saying this right, which is a slow moving martial art, because you have to kind of keep your psyche stable, because it's such a roller coaster. I used to joke is that if you visualize the best time of your life and the worst time of your life, and know it's going to happen every day as a roller coaster. A lot of people get addicted, with the hormones, but other people, they just burn out. So it's the ability of managing your mental health.
Yeah, absolutely. I'm glad you raised your art, because when we were preparing for this interview a little while back, you mentioned that you had a show coming up, and so I went and looked at some of your things online, and it's just amazing. Like I love it. I agree with you. I think it's so important to have a balance in your life and what you're doing, and to make time for other things. I always say to my attorney colleagues in the firm, and to clients, I think it's some of our activities outside of work that make us actually better lawyers or better founders, whatever the case may be. If those who are watching, check out Anne's art. It's pretty amazing.
Thank you.
Anne, I want to thank you again for joining us. You truly are such a leader and a pioneer in this space, sort of well before its time, frankly. And so, it is really meaningful to have someone like you who's been leading the charge, share your years of experience and your insights. And I know that a lot of the founders who are watching this are going to find it very helpful as they go out and find, the right partner for the right investor partner for them. So I will wrap by just saying, at Nixon Law Group, we work with founders every day, all day. It's what we do. If you are curious about the firm, you can check us out on our website, or you can follow me or the firm on LinkedIn. And before we sign off, Anne, I'll just ask, is there anything else you'd like to leave the audience with before we wrap?
Yeah, if you're a founder, if you're passionate, just do it.
Love it. Love it. Thank you to everyone who's been watching. I hope that you will check out some more conversations with VCs to watch in healthcare next time.